ready to unlock the secrets of financial freedom on Infinite Banking for real estate investors. This show is for visionary entrepreneurs who value family, faith, and financial freedom. It's time to seize control of your finances and craft the future you've always envisioned. And now, here is your host, Mark Clark.
All right, welcome to our podcast, Infinite Banking for Real Estate Investors. I am Mark Andrew Clark, an authorized infinite banking practitioner with the Nelson Nash Institute. If you're like me, you have a passion for real estate and you probably also value family, faith, freedom, and fitness. You may be a seasoned investor or looking to get into the real estate for the very first time. Either way, we're going to show you how infinite banking can create velocity with your money and your real estate portfolio. Today, we are very fortunate to be joined by Mark Anthony. Mark moved to Arizona from Boston in 2014. He tried wholesaling, completed 3 single-family homes, then stumbled across mobile homes from a lady seller financing 150 units, making $55,000 per month, 18 months into her business. Mark knew friends who used IBC to finance cars and wondered, if it works for those vehicles, could it work for mobile homes? He started seller financing mobile homes, originally using a policy loan from a friend to fix and flip a mobile home that sold on payments. He used their down payment to open a policy on himself and used their monthly payments on the mobile home to pay his policy premiums and pay his friends back on their policy loan. Then he got into moving mobile homes and installing. Now he develops land using mobile homes and buys his inventory using policy loans and sells homes seller finance using IBC. I love it. Mark, welcome to the show.
Thank you for having me.
Yeah, so take me back to that beginning, how you stumbled onto the mobile homes and then it wove itself into the beginning of infinite banking.
Yeah, so I knew nothing about mobile homes, coming from Boston, really old city, everything built in the 1800s. So completely unexperienced in mobile homes, but I'd done a lot of research and studying on real estate, trying to do lease option, wholesale. Those are kind of the things I was trying to do in single family homes before I came across mobile homes, was, doing lease options or, like wholesaling through a lease option, getting under lease and selling it, trying to do stuff like that. And I'd gone to a meetup, like you mentioned, and the lady had mentioned this book called Deals on Wheels by Lonnie Scruggs. And while I was at the meetup, I got on the OfferUp app and found a mobile home for like $1,200. And then I went to go see it the next day, and I didn't know what to expect. I wasn't even expecting to buy it. I just wanted to see it, and I ended up liking it. It was an older 1974 mobile home. And for those who don't know anything about mobile homes, there's a rule for mobile homes that are pre-HUD and post-HUD, which is 1976. HUD basically changed these rules, or HUD was basically enforced, where they weren't allowed to have lead paint or galvanized plumbing, which is copper pipes, which almost all the mobile homes had, and which is trouble for mobile homes because that means they can't be moved without getting a rehabilitation certification, which could cost $8,000 to redo all the plumbing. So that pretty much means that any pre-HUD mobile home pretty much goes to the junkyard. It pretty much gets retired. Okay. So I bought a home that was in 1974, just not knowing. I bought a mobile home that was in a 55 plus park, not knowing, in Arizona, that that time of year that Arizona's a snowbird state. A lot of retired people come here for just the winter, leave in the summer.
Sure.
And, when I originally bought this home, I had bought it. I'd met the guy. He said it was $1,200. I had $200 in my pocket. I said, great. I will bring the rest of the money on Friday. This was like a Monday, Tuesday. I said, I'll meet you on Friday. I can come back. It was on the other side of the city. And by that Wednesday, I had found a woman who was going to pay $5,000 down, and I sold it for $17,500 on payments. Used her down payment to open up my own policy loan, and then she was paying $600 a month, which was just paying my policy and my friend's policy that was $200. I gave me a $4,000 policy loan to rehab it. I had actually ended up repossessing that home from that lady about 8 months in. She had wanted to move back to Pennsylvania, something wrong with her daughter. So I gave her two options. You can sell it, pay me back the rest. She still owed like 14,000, 15,000, or you can give it back to me. And at that point, she gave it back to me. I got the policy loan from my friend, fixed it up. We resold it again a second time, and restarted the payments, kept my policy loan going, and then I started paying back his policy loan. And then after that, um, started doing more homes. Started going to auctions. I had a friend here who used to own a car lot, and he knew about car auctions, and we started looking up mobile home auctions. We found tax auctions for people who own their mobile home but don't own the land. Sometimes in a park, sometimes it's on their own land, but they don't have it deeded to the land. So they still have a title of the mobile home, which means they still have a tax account for the mobile home, for the vehicle, like a car, and they have a tax account for the real property of the land. There's two different tax accounts. And some people don't know about that, so they never end up paying the mobile home tax account, and those end up going to the sheriff's auction. And so we were finding these homes at the sheriff's auctions, and how the way the sheriff's auction worked, it was just paid whatever the tax lien was the opening bid. If nobody bid, because nobody would go to these, nobody knew about them, they would cut the opening bid in half. If nobody bid again, they'd drop it all the way down to $1 and start the bids at $1. So we were going and buying mobile homes, $10, $50, $100, as many as we could that weren't, after we learned, that weren't pre-HUD homes. And the parks are starting to have trouble because there's a rule in Arizona that you have a right of easement and passageway to your personal property, even if you have to trespass on private property. How I explain that is, imagine you're at a mall, you park in the mall's parking garage, the mall closed at 10, but your movie gets out at midnight. Technically, the mall is closed. Technically, going in the parking garage is trespassing, but you're allowed to trespass because you're allowed an easement to your personal property if you have to trespass the property. So that's how mobile homes work, unless you sign a lease. If you sign a lease, you sign away that right. So if you don't pay your lot rent, they can evict you and then trespass you and not let you come back. So your vehicle can be abandoned for 30 days and go to auction. So we started going to these eviction auctions and these tax auctions. And if you repossess a mobile home as a lien holder, we'd pay off the lien, put our own lien on it, repossess the lien. So we wouldn't have to pay any state transfer tax, because in Arizona, you have to pay a sales tax every time a vehicle title transfers. So not just like the first time from the factory to the dealer, or the dealer to the customer. It's every time the title changes hands, there's a sales tax for the state. And as a dealer in Arizona, you also have to pay into a replenishment fund, which is like 8% of every sale, in case anybody like files a claim, or it's kind of like insurance or a bond.
Yeah.
And so the parks, there's a law that says if you repossess a mobile home, you don't have to sign that lease agreement, which means you have free, passageway or easement to your personal property, even if you have to trespass. And some of these parks are gated communities, like golf club resorts, and the parks, obviously don't like rent not being paid, but there's no law that says we had to. So we would hold these homes until they sold, and sometimes it'd be a couple months, and the parks wouldn't approve people because they found out we would get the homes at the sheriff auctions for $10, and they'd be selling for 50,000, 40,000, 25,000, and not paying rent because we don't have to. And the parks, we'd send people into the park to apply for a lease. They wouldn't get approved. We'd kind of just begun to find out that the parks just aren't approving people because they don't have to, because they don't want to. So we started changing our marketing, finding customers who own their own land around, the Phoenix metro area, and wanted their homes moved to their land. And we noticed like almost all of the demand was in that, because nobody was doing. All the companies that moved homes and installed homes only installed them and moved them for the factory, because the factory paid them up front in full. They didn't have to deal with any customers or anything. The factory would line them up with 10 homes for the next 6 months. They'd get paid in full, whether they started it or not. So the major moving companies weren't moving used homes. So it was really hard for people to find a used home that could be moved and installed, because there was nobody out there. So that created a huge demand and created opportunities. And we started to see that. So we started buying the land too, and started going to tax auctions and getting the land. And we realized that basically all of our customers were pretty much in these certain areas of the county. And we started using these tax auctions and using our policy loans to go to these auctions and buy the inventory, move them, sell them, affix them. And then when we started to sell them on payments, they would pay back the policy loans that we used to buy the land in the trailers.
That's amazing how each step of the way you found an opportunity, and you kept fine tuning it to fit what people needed, and now it sounds like you have a really proven model moving forward. So
The really
congratulations.
hard part was because it's almost impossible to get loans on mobile homes. The only way you can get a loan on a mobile home is through FHA or traditional mortgage, and it has to be affixed to a piece of land, and it has to be the first and only time and only place it's ever been installed anywhere. As soon as it moves, it no longer qualifies for any loans. So it's
Gotcha.
almost impossible to finance them unless you can get a personal loan, a chattel loan using your land as collateral, or a construction loan or some sort. And
Okay.
those
And is that how infinite banking specifically ties in here? You're able to use policy loans to purchase the land and the homes.
even more importantly, create financing and then inside the policy build equity if they want to take out what I call like home equity lines of credit, they can.
Oh, amazing.
Which
That's
there's
fabulous.
no other product that can do that for mobile homes where they can essentially have equity in it and be able to pull it out if they need to.
Hmm.
And I offer it as an option.
That's great. And Mark, tell me about, I think you may at some point want to share a spreadsheet or something, but where do you see this moving forward? And is this applicable to people in other parts of the country?
So for the past 8 years, I started this academy called Trailer Cash Academy with two of my friends here in Phoenix. Starting to teach people just how to wholesale mobile homes, like literally do your first wholesale deal, whether it's a mobile home or anything, just the basics of wholesaling. And that grew, and it got a lot of notoriety. People started seeing it, and I started getting interviewed on a bunch of other podcasts. And a lot of our students in other parts of the country started to branch off, make their own courses in their states, Georgia, Florida, Texas, Carolina, Virginia, all over the country, and growing their own, communities with their own like local meetups essentially. And
Yeah,
I've been, interviewing, podcasting, coaching, teaching, mentoring, and all those. And we have a bunch of mentorship programs, coaching programs across the country. And now that we're kind of making like when you think of like real estate, you think of like Airbnb, short-term rentals, fix and flips, maybe sub two. Never ever do you hear about mobile homes or read books on mobile homes or hear meetups or hotel events where they do conferences at hotels about mobile, maybe tax liens, but never mobile homes, right? Um, but it's starting to become more mainstream. It's an extremely large market of the population, at least across America, that live in mobile homes, like in rural areas, maybe not right downtown in the city, but outside of the cities, in smaller cities and rural areas that aren't the major cities. I mean, everywhere. They're everywhere across America, and it's extremely underserviced. I always say it's like a blue ocean, no sharks, and it's extremely high demand, and there's not a lot of people servicing it.
gotcha. And it must be gratifying on two fronts, especially I would imagine. Number one, to see your students or former students sort of succeed in their own geographies, and then also to serve the people that benefit from purchasing and living in these mobile homes.
Yeah, we see it a lot, really dramatically, I should say, in states like Florida and Arizona, where we have a large Mexican, Cuban population that can't necessarily live anywhere else. They don't have necessarily the paperwork. Yes, they have money. They might own their own businesses. They have the money,
Hmm.
but they can't go into a bank to get a loan. They can't go into an apartment complex and apply for a lease. They can't, they can't do that stuff without using somebody else's stuff to help them. But they have the cash. They can buy the land. They can buy the mobile home. They can make the payments. And for that to help those type of families who have no options, help them find a way around and navigate to their American dream where they own their own property and they own their own home and it's theirs, or it's not rented and it's in America and they're literally coming from Mexico or wherever a couple of years ago and they're able to, achieve that their version of the American dream. That's, you know, it's cool to be a part of it.
I love it. That's fabulous. And did you want to go ahead and share some specific
Yeah.
numbers?
These are some of the notes that we created. So we started creating notes across the country. I started partnering with a few people that were in the mortgage industry before. And so now we literally just do this to create notes and we even sell these notes. So sometimes the notes can go anywhere from like 5 to 7 years in sometimes some senses, depending on how we want to set up the policies or how the policies are set up in some cases. But this is typically, hold on, I'm trying to move this little cursor thing so you guys can see. Oh, here we go. Kind of typically what an average month looks like across the country. So we got a couple South Carolina, Maryland, Indiana, Georgia, Arizona, Missouri, Texas, Florida, Ohio. And we got the list prices. So they pay 10% deposits. And they're about 15% on average. Let me see if I can scroll this over all the way over here. So you can see all the way to the right, the far right is the interest rate, right about 15, 16, 17%. That's based off of credit. The number of years, anywhere from 5, 10, or 7. We have sometimes people come in and buy and hold the notes. So when they buy and hold the notes, they actually take over the title and they collect the payments. And then whoever was selling the home, gets paid out. They're out of the deal. They don't have to carry the note if they don't want to. Say if they're just, because we do loans to investors to fix and flip, and then sell to people with financing if they need to. And so we help them find note buyers who will carry the note for them, or they'll earn their 15, 16, 17%, which is about average depending on their credit score. But any average note anywhere between like 25,000, 70,000. I've seen some Arizona as high as 120,000, 90,000 for these notes. And
in a lot of cases, this is really the option that people would have to finance, correct?
Yeah, unless they can find their own third-party lender, or like a big company like 21st Mortgage, Vanderbilt, are a couple, but they're really hard to work with.
So it's just a fabulous option. It gets them into their home, and you're earning a spread on your money that you're loaning out.
That's right.
And it's still working within your policy as well.
Yep, all of it.
Well, how instrumental has the infinite banking piece been to grow your business and your system?
It literally, I call it the linchpin. It is what makes everything go round. Without it, just from the tax implications on the capital gains on all this, long term, since these are long term loans, or if you just flip these homes, do the fix and flip version, you're still taking out the policy loan. So it's all pre-tax money. So now all these transactions that would be major capital gains, like some of these homes can be bought in some of these states, South Carolina, $1,500. You put $8,000 into it, sell it $40,000 on payments. The capital gains on those type of things is all saved from using this policy right here. And then obviously recapturing all the interest inside the policy to compound that is just keeping it all in the bank. You're not giving it, keeping it all in your own bank. You're not giving it back to the other banking institutions. And what I try to kind of use as a way to explain it, it's kind of like a policy. It's like a time machine, especially when you start lending out of it. Say you don't do any lending, you pay let's make it easy, $10,000 a year on a policy. Year 5, you should have $50,000. If on year 1 you start lending out of that thing and these loans get paid back, say you do the flips and you're paying back your policy loans back into the cash value, you could, speed up the rate of how much cash you're putting into your cash value from paying back your loans. In year 5, paying back 2 or 3 loans, you could have now $70,000 worth of cash value instead of $50,000. So you're basically speeding up the rate of compounding in your policy by 2 years. It's time travel for compounding interest.
That's great. I love it. A time machine.
It's time machine, speeding up. And they always say money, success, they love speed. So the more you can use and work in your policy and be a good banker and a good steward to your bank, like and Nelson Nash, he always says the grocery store analogy.
Yep.
Don't eat the free Snickers.
That's right. And don't steal those peas.
Right. It grows so much faster and allows you to do so much more.
That's awesome, Mark. Well, I appreciate you sharing that with us. It's a tremendous success story and an underserved component of real estate that we need to shed more light on. How can people connect with you if they want to reach out to you?
I have Facebook. You can text me. We also have a group on the school platform, teaching people how to just basic into mobile homes. We will go over everything from wholesaling, fixing and flipping, rent to own, financing homes, hiring contractors, moving mobile homes, and developing land. All of it's inside there. You can find us on school. I can share the link here with you later. You can probably upload it in the comment, in the description.
Yeah, definitely put that in the description in the comments. So awesome. Well, Mark, thank you so much. Appreciate your time and your valuable input. I'm just so excited to learn more about this because I haven't certainly have not delved into mobile homes and mobile homes yet, and I'd like to learn more. So thanks for shedding light. And we encourage you to visit our website right now at generationbankpa.com and get your free copy of Becoming Your Own Banker by Nelson Nash. This is the first step in implementing your own self-reliant banking system, allowing you to fund the real estate deals you want, when you want, and how you want. Again, that is generationbankpa, as in papaalpha.com. Until next time, we hope you hold dear family, faith, fitness, and freedom. God bless.